Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to this edition of the Moving Iron Podcast, Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com and tractorzoom. If you're looking at what's going on in the auction marketplace, and you want to see trend lines develop, and even more importantly, what the upcoming auction market looks like and what those inventories out there look like and how to start predicting what's going to start happening in the used equipment marketplace, check out TractorZoom's Iron Comps, and you'll get to see a lot of great information there as to what's happening in the auction market. So if you're interested in that checkout, use Moving Iron and you'll get yourself a nice discount. Chip is with Blue Reef Agmarketing out of Morton, Illinois, and Chip is nice enough to come on once a week to talk about what's going on in the marketplace. And Chip, we're starting to see that volatility we've been talking about rear its ugly head. We've had that limit up report Wednesday, and Thursday had a good run, and then Friday things kind of fell off sharply. And then, Monday and Tuesday, they've been kind of bouncing back around. So what's your thoughts so far, and kind of what do you see this volatility going in this coming week?
Yeah, I think only expanding. You hit on that. We saw a lot of volatility, a lot of mostly spread volatility between old crop and new crop contracts and corn and beans. I think that report was a shock to a lot of people, myself included, who kind of were leaning towards the fact that maybe the stocks report would be where the fireworks were and the bullishness, and that the acreage would maybe be a little bit bearish. So people were, funds especially, who trade just massive leverage, were long old crop, short new crop, and that report actually came out the exact opposite, right? All the fireworks were on the acreage side, both corn and bean acres being way below expectations. And so it caused about a 3-day correction in the spreads, as a lot of these funds either exited the old crop, new crop, or rolled some of that position to where they were just long new crop. And now, as of yesterday, Monday, that seemed to have straightened itself out a little bit in the beans. And it seems like overnight and into the early morning trade today on Tuesday, that's starting to normalize a little bit on the corn to where the old crop is starting to lead the way again. And in my opinion, that has to. If the market's any good, the old crop has to lead the way, because if the new crop takes over and leads the way, and it artificially keeps the old crop low, that re-stimulates demand, right? If we have a problem out for the new crop, then we've got an immediate problem. You have to slow demand down right now in order to bridge the gap to get to new crop. So I think that was just a little bit of a 2-3 day anomaly in the spreads. But what it's going to do is just increase the volatility, because if you plug the acreage number into the balance sheet for new crop and assume trend line yields, there's some big assumptions in this, and they will change as we get more information and go down the road. But you plug the acreage in, plug trend line yields in, plug a demand assumption in that's equal to this year on corn and beans, and in beans especially, you're essentially out from a new crop. You have no ending stocks. Now, obviously, there's a lot that can change, and demand's going to be one of the big things. You also cut the carry out dramatically in corn. So there is no margin for error here. All that says to me is it's going to just increase what was already a volatile environment. It's going to make it even that much more explosive as we get into new crop. plenty of forecasters, well-respected conservative forecasters, very concerned about, a hot, dry summer, particularly in the western Corn Belt where you are, up into the Dakotas. And, a lot would argue you're already starting to see that here. I mean, we've got way, way warmer than average. You have planters rolling already here, 5th, 6th of April. That's about as early as, you ever see it around here in this part of the state of Illinois. And so it has people a little bit worried about 2012. It has kind of the same feel as 2012, very early spring, a lot of planting early, warmer than average, and then it just never rained again. I'm certainly not predicting that, but it has people a little bit nervous. And so this weather going forward is just going to create the potential for massive volatility both ways, right? It doesn't mean it's going to be horrible. We start getting rains and, get the market thinking we've got a big, big crop potential coming. That volatility could obviously be lower as well. And South America plays into that. They're about wrapped up with bean harvest in Brazil. And they've got their second crop corn in the ground. So the next 60 days is going to be 60 plus days, I guess, going to be really critical for that second crop corn and have a dramatic influence on our corn prices here, because that's essentially, any bushel that they fall short is a bushel that's going to be added to our exports. They export primarily that second crop corn. The world has huge demand right now. And so, it's not just weather here. It's weather in South America, weather in Europe and the Black Sea. It's very much a world market now.
Yep. All right. So let's focus on that demand for just a minute. So in your earlier statements, you talked about demand, and that's going to be the big leading indicator as to what happens with this marketplace, especially as we start looking at, how is a potential drought going to play into this and all the different factors that are coming around there. But let's just assume for a second that we have trendline yields and we're plugging along like we're supposed to. What are some of the demand factors that you're going to pay attention to that you're going to start saying, like, these are some canary in the coal mine that I'm starting to pay attention to?
Yeah, well, the biggest is going to be China. That's what people are going to really hang their hat on is, China obviously over the last several months been massive buyers of not just U.S. Ag goods, but obviously South America as well. So is that Chinese demand going to continue to be there? Is going to be first and foremost. That's really what's going to drive us. The other demand likely is going to stay there to some extent. And this is going to be a function of supply as well, right? I mean, it's a world market. So, the Black Sea area, Russia, Ukraine, they're getting ready to plant like we are. They're on the same season as us, obviously. How big is their crop going to be? That is going to play into this. South America is wrapping up harvest now. Due to currencies and price levels down there, they're at basically record all-time high prices for about the 4th year running now. So they're going to expand acres as much as they can down there this winter, which is their spring when they go to plant. And so some of this is supply-driven as well. But that's really going to be the big thing. It's China. China's going to drive this. And unfortunately, right, wrong, or indifferent, we're just going to have to get used to that, right? I mean, we played that game all through the tariff war, and is China going to buy or they're not going to buy? We're going to have a trade deal. They're not going to have a trade deal. We're going to replay that in just a different version now, and that's going to be: is China going to buy U.S. corn? Are they going to buy U.S. beans? How's their African swine fever issue shaping up? There's a lot of moving variables there, but the key driver, unfortunately, probably for the next decade or more, is going to be Chinese demand. And that's if you can predict that, that's what adds to the volatility, because they're so unpredictable that you have no idea. Was that the last bushel they're going to buy for 3 years, or are they set to just buy more beans than we could ever see imaginable? And you could make a case for each side of that. So some of the other normal, Mexico, Japan, some of these other more normal customers that buy our agricultural products, they're much easier to gauge on the demand because they're pretty regular. They buy about the same amount every year. Good, solid, strong customers. China is their own animal, and it's impossible to predict what their future demand is going to be, but it's going to be such a huge influence on our price levels that it's going to just add to the potential volatility that we see.
Yeah. Okay. So let's jump over and let's talk about. Well, first off, let's stick with this. One more question on this. All right. So with the Chinese demand, and as it grew through the tail end of last year, and the amount of product they were buying from Brazil, right? Corn, soybeans, those kind of things. I mean, so Brazil effectively sold everything they could sell to the Chinese to a point where they were actually buying corn from the U.S. to supplement, their stocks that they had. This next corn crop that comes up, and this is, like you said, it's primarily something that they're going to export and those kind of things. How much of that do they need to keep for their own stocks? Is there going to be a big line in the sand there where they say, okay, we're not going to export past this? Where does that line in the sand come into play in this demand conversation?
Yeah, so that's interesting as well, right? Because a lot of these countries, particularly Russia, but Ukraine, are worried about food inflation, right? So they, as is China, and so they are very aware of the internal price of food, right? Flour and wheat in particular in Russia. And so when they see those price levels increase, they start curtailing what they're going to allow for export to try to keep that supply internal to help stabilize their food prices. So there's some of that involved in this as well. And I still, I still go back that we had a trade deal, but I think it was a perfect storm. I think China had a bad crop as well. I think through the trade wars, they had drawn down their domestic supplies and stocks. And because of that bad crop they had, they were going to buy the amount they bought from us, irregardless of the trade deal. That's my opinion. There's no way to prove that. But I think China had the demand, trade deal or no trade deal, and they were going to buy what they bought from us. And so you can bet they're going to try to encourage more acres be planted there, encourage high yields, encourage that, self-sufficiency as much as they can, so they don't have to rely on other sources in the world for their food supplies, right? I mean, this thing's starting to be more and more unstable politically in the Middle East. China's flexing their muscles some. That might all just be kind of a testing of this new administration. But, if you're China, you don't want to be dependent on Brazil and the United States to feed your people when, the vast majority of the world sees you as maybe the biggest enemy that there is right now, politically and militarily. And so, there's all that plays into it as well. So, it's like a giant, 6-dimensional chess game that's going on, and our commodities are in the middle of it, but there's a lot of other stuff that goes into play as well, and it makes it really hard to gauge that demand, when China's there and not knowing what they're not going to tip their hand and tell you, they're smarter than that. They've been playing these markets for a long, long time, and there's no one better at it than China. And so good luck if you can try to predict it. Now, this Friday, we've got our regular April crop report where we'll get updates on demand, primarily carry out world numbers. But then in a month, on the May USDA WASDE report, that's our first snapshot of new crop. They'll come out, they'll update old crop. They'll also give their first balance sheet on new crop. So a month from now in May, that could be a wildly volatile report as well, because that will be the first official figure as far as demand goes. Now, we had in February the Ag Outlook Forum that had some demand assumptions there, and they were pretty big, but they don't always match. That's a different division of the USDA. They don't always match what the May crop report says. So and by that time, we'll know how the crop's going in the ground and our planting pace and whether it's still dry or we're getting better rain and a lot of stuff to hit this market in the next, 2 to 4 months.
Do you expect much out of the April report, of this coming April report?
Well, based on the demand export pace and the demand pace that we've had, I haven't seen any average estimates yet, but I kind of think the market is going to go in there believing that they're going to raise demand on corn and beans. All the evidence is there based on the pace that we've sold, the pace that we've shipped out, that exports are too low on both corn and beans. And so I think that the market's expecting a cut and carry out because of increasing demand. If they don't get it, that could become a little bit negative, especially if we have a nice open window of weather and planters rolling hard. So, it could in its own right, this April crop report add to the volatility. But I, in my mind, the market is expecting cuts in carry out. And the fact that the bull spreads are working again, meaning the old crop is starting to lead again now in corn and beans, and we're starting to rally and give back some of what we lost off the highs from last week, tells me that the market kind of expects tightening stocks on this April report.
Gotcha. Okay. All right. Let's talk about wheat for a little bit. Wheat condition reports came out this week, and really they saw. Looks like hard red winter wheat was up a little bit higher than what they had expected from the fall. It looks like they're doing good there, but they saw some declines in the soft red winter wheat out there right now. So still, though, it's not a rosy picture for wheat. We're kind of at the middle of the road as far as what they feel like average condition looks like. So I guess talk about the wheat market and what you see happening there.
Yeah, well, wheat is, we could talk for 5 hours on wheat, talk about a tough market to gauge because of all the supply in the world and kind of unknown demand. But at the heart of it, we did, as you mentioned, start getting our first winter wheat condition reports. 53% good to excellent. That was exactly what they were looking for. But on the backside of that, I believe there were 16% of the wheat crop was rated poor to very poor, and most of that was in the plains, and that's obviously where the biggest production is. In my mind, and I know you can kill wheat 19 times and still have it yield really well, but I just can't believe we're not going to eventually see more problems at harvest and in final yields from this, massive cold snap we had earlier this winter. It seems like that was forgotten, and maybe we can get through it. There's arguments out there. There's a little bit of snow cover. Maybe that helped. I just cannot believe, if you look at the temperature maps of how cold it was for how long it stayed that cold, that you're not eventually going to have some problems or have that show up in poor yield and maybe poor quality as well. That's a harvest issue most likely. But, 53%, it's okay, but it's not like it's we're maybe staring down the barrel of the biggest wheat crop we've ever raised. So, and there's still time, as you mentioned. You guys out there in western Nebraska, very, very dry. And so moisture and temperature are still going to affect this into harvest. And again, my brain tells me we haven't heard the end of, the potential freeze damage that we saw this past winter. And so as a starting point, 53%, it's as expected. But I think what the market's going to watch is how does that poor to very poor shape up over the next 6 weeks here. Do you start seeing that crop improve and the poor getting better, or are we going to start seeing, the middle of the ground rated wheat drop into that poor to very poor, and that's going to drive us. Demand's starting to pick up a little bit. Egypt looks like they're starting to put a pretty big buying program in place, and it's just the wheat market's really hard to gauge. It's going to be a follower to corn, and corn plays in this from a feed ingredient standpoint. Wheat can't get too low and too far below corn because you'll increase the demand, as far as feed rations go in the plains. And you've already arguably to that point where, Kansas City wheat kind of factors in there at current levels between, Kansas City wheat prices. July new crop wheat, $6.17, July corn, $5.45. So, you're right there to where if wheat drops much more, that starts working into a feed ration and starts increasing the demand and cutting the carryout on the wheat side. So there's some give and take with corn, and how high corn goes is going to really affect the wheat market as well.
Right on. All right, jump over and look at proteins real quick. Cattle market's still having a pretty good run here. Looks like they're up week over week here, and looks like the hog market is kind of had a little stable, had kind of a little dip this week. But I guess as you look at those two markets again, we're heading into that grilling season. That's kind of like the big driver for boxed beef and boxed pork and those kind of things. So as you take a look at those markets, what are your thoughts there?
Yeah, finally, we spent 7 weeks stuck in the mud at 114 cash in the cattle. We're finally seeing some life there. In fact, we're a couple bucks higher last week. There's some people thinking maybe it can be up towards 119-ish this week. The futures have a pretty big premium built in. That's been part of the struggle for many months. Is the futures are at a higher level than where the cash is. And so the futures, the cash rallies to meet the futures rather than the futures rallying sharply. But it seems like all systems are go right now. Cash market is rallying. The box beef is really screaming higher. Packer margins are still there. They're paying up. So all systems go right now as far as the cattle go. Now that doesn't mean we're going to 140 cattle or anything. I think some of this is a little bit of a catch up to what hog prices and pork prices have done. And we mentioned the spreads in the grains. There's a lot of spread activity that likely has been there long hog, short cattle. I think maybe yesterday you started to see some of that be unwound a little bit. But hogs have their own bullish news that later in that cycle of bullish news there. But still massive demand, big gains almost on a daily basis on pork products. Last week was a massive export week. China's still there. In a big way. We had our biggest weekly pork export report of the marketing year. I think it was like 61,000 tons, so a massive number there. China was 34,000 tons of that. So we got the bull market started here finally on the cattle. We've been waiting a long time for that, and we're well into it on the hog. We really need to, from any hog producers out there, I do think that you can go higher, but we can't just stick our head in the sand here, right? You're talking about, we hit 107 yesterday on June lean hog futures. You're up in here in rare air. We haven't been here just a couple times in history, and never this early. And so we really have to keep our eye on the ball out there. I know corn prices are higher, meal prices are north of 400 a ton, and so that's crimping margins a little bit, but this hog thing continues. We've got to look at locking some stuff in and playing defense out here eventually. It's not going to last forever, but it's good that it's here right now, and we'll take it for sure.
Right on. Well, good stuff as usual, Chip. If folks want to reach out to you and get more information about Blue Reef Agri-Marketing and what they can do for their operation, what's the best way to do that?
Yeah, best way is just call our office, 309-550-7213. We'd love to talk to you. A lot going on. Pays to keep your eye on the ball as much as it ever has. So having a plan and executing on it really pays dividends.
Yeah, good stuff. Yeah, no, there's lots of stuff moving right now, so there's plenty of reason to adjust and readjust what you have on your marketing plan so far this year. So definitely keep your eye on the ball and definitely reach out to Chip and his crew about what they can do to help assist that. So I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. You can also go to MovingIronLLC.com. You can find all the latest editions of the Moving Iron Podcast, blogs, also information about the Moving Iron Summit coming up here September 15th through the 17th in Nashville, Tennessee. If you're a dealer and you want to come to that, feel free to jump on there and get all the information about the agenda, the speakers, information to register, and all those kind of things. A great place to come network, a great place to get faces to names and those kind of things. So make sure you check that out at MovingIronLLC.com, upper right-hand corner. Click on the Moving Iron Summit link, and you'll get all the information you need there. Make sure you check out the Dryland Farmer Podcast. It's a great podcast to listen to. It's a funny podcast. It's like the Seinfeld of podcasts, and Brent and Lane will keep you guys laughing throughout the rest of the day here. So With that, I am Casey Seymour with Chip Nellinger. Let's go some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.